All right, welcome back. Listen to this. Just 2.5% of the homes in the U.S. changed hands this year in the first 8 months, which is the lowest turnover rate in at least 30 years, according to analysis by Redfin. And what this data tells us is that the housing market in 2024 has been really frozen. That was said by Shen Zhao. He's Redfin's economic research lead. He also said, we said the same thing in 2023, and I think there was this expectation that it couldn't get any worse. But 2024 has been disappointing for the housing market as well. Well, I think, personally, disappointing is an understatement. And if you're breaking 30-year-old records, I'd say it's pretty significant. So this is the stat. About 25 out of every 1,000 homes, not for sale, but just out of any group of 1,000 homes, they were sold between January and August of this year. That means 37% fewer homes were sold between January and August this year than during the same period in, say, 2021, which saw a pandemic-induced burst of home buying activity, and 31% fewer homes than in the same period in 2019. So make no mistake, a person's largest asset, one of their largest assets in their personal wealth is their home. Rates are higher, but they look to be coming lower. But will this shake the tree and bring more homes onto the market? But if it does, doesn't that bring out more bargain hunters with lower rates and ratchet up competition? All I say is this just looks like a complete mess to me. But I drafted in my next guest to talk about it. Please welcome into the show Mr. Craig Bolanos. He's the CEO and co-founder of the Wealth Management Group in Chicago. Again, lots to unwrap here. If you feel like taking a right turn and moving into the port strike and the airstrikes, that's fine with me too. But right now, we've got a housing market that looks to be maybe becoming unlocked. But when it does come unlocked, doesn't that bring more competition in for buyers?
Yeah, I mean, is anyone really surprised that people aren't moving? I mean, last time I went to my local lawn and garden center, we're not selling nearly as many perennials and annuals because people aren't doing all the landscape. And how can you blame anybody when people are locked into mortgage rates under 3%, when housing has become so incredibly unaffordable, when you have new higher mortgage rates and people aren't being incentivized to necessarily relocate for work because they're all working from home? We're smashing 30-year records the same way the Chicago White Sox just lost more games in baseball than anybody in the history of the planet. So not all records are to be celebrated. And I don't think this one is either. And I'm sorry, I digress. Your question was, will lower rates start to create some inventory in the marketplace? My answer, yes. And in particular, where's that going to come from? It's everyone who bought a lake home or some other type of vacation property in the time period that was 2020 and 2021. And here we are 4 years later. And you know what they're realizing? They're only going to it 6 to 7, 8 weeks out of the year. The cost of second home ownership is where I think you're actually going to see the inventory loosen up first. Then the primary mortgage market will change second.
That's a great point. And I also think that there's a movement underway of assignable mortgages. Like, so if you can give your mortgage to the next guy that's buying your house, I don't know if that'll ever really gain any steam. But if we do see lower rates and we do see more inventory, I think that hopefully that brings the price down. But we've had a lot of housing experts on, a couple, three of them we have on this show each week. Let's say that the housing, the supply is so woefully behind that it would take a lot to really change that going forward. And I do the show with a couple of editors in my room, my office every day. They're younger people. They say it's just almost, there's no way that they can buy a house right now. I mean, and these people they do have great jobs. They do everything right. And the market's just run away from them. And every time they think that they'll wait another year to see if things get better, it gets worse.
No, you're right. So is there going to be some dislocation and reset in the marketplace? I say not. Why? While we might not be having a lot of new jobs getting created, we're not seeing massive layoffs. And the only way we're actually going to see a substantial change is if there's a substantial change in the labor market. But the lowering of interest rates, tax credits to first-time home buyers, all of these policies do one thing. They support current prices, if not push those prices higher. So you're right. The words were the dream of home ownership has run away from so many. We have created a permanent cycle of renters in this country, and that's evidenced by all the institutional and private equity money that has gone into residential real estate that is not going to be abated.
And I've said it before a couple times. I know obviously Nashville's a hot spot, and where I'm close to town, and I've seen it in the 3.5 years I've been here explode, even more than it has done before that I got here. And it's very interesting to me to see big tract housing. I mean, big subdivisions that are just being built for rent only. I mean, are you seeing that? Yeah, rent only. Are you seeing that in Chicago?
We're seeing that in Chicago. In fact, we're seeing so many of the condo buildings, in HOAs, some of the institutional investors come in, they buy a couple of condos. Next thing you know, they take over board seats. Next thing you know, the entire building is being sold, converted back to rentals. That's how much money is in this space. So I think there's actually complacency in housing. I think there's complacency in a lot of places, and I got to work this in. Scott, if you would have told me there'd be ballistic missile strikes on Israel and the Dow would only be down 80 points right now while we're talking, there's complacency built into the stock market as well.
Yeah, with all the risks out there, you're exactly right. Now, you mentioned the port strike either. I mean, I don't know. Is there that, real quick before we go, is there that much money out there that people can be complacent, or is there going to be a day where you have to pay the piper?
But there's going to be a day that we pay the piper. I remind everybody that it is Halloween. I mean, it's coming up this month. We are in October, and it's not always trick or treat. There are ghosts and goblins and spooky creatures that lay under the bed and in the dark thrones of the closet. And I wouldn't be surprised that we have a 5 to 10% correction in the month of October, the same way we did August. I think that's good for traders, but I think it's also for those who are underinvested still, Scott. There are so many people underinvested that it's an opportunity to add to some positions and stay long.
When stocks go on sale, you buy them, you don't sell them. Thank you very much, Craig. Craig Bolanos, he's the CEO and co-founder of the Wealth Management Group in Chicago. Thanks for being on. We'll see you again next week, Craig.